Welcome back to Investing Talk Podcast.
Today we're looking at Reviva Pharmaceuticals, ticker RVPH. The big question is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. When you look at Reviva Pharmaceuticals, well, you're looking at a clinical stage biopharmaceutical company.
Right. And that immediately tells us something important, doesn't it? Their value isn't based on sales today.
Not at all. It's entirely tied to the success of their pipeline down the road. Their focus is pretty broad, actually. They're addressing these high unmet medical needs across areas like neuropsychiatric, respiratory, inflammatory, and even cardiometabolic diseases.
Quite a range. But when we talk about Reviva, I mean, the conversation really centers around one specific molecule, doesn't it?
It absolutely does. Brilaroxazine, that's the one, also known as RP5063 in the trials.
That's the star of the show.
Yeah, definitely. If it fails, the company's value proposition, well, it basically evaporates.
And it's not just any drug candidate, right? The sources say it's designed to be different.
Yeah, it's described as a differentiated multimodal dopamine serotonin modulator.
Okay, that's a bit of a mouthful.
Yeah. But the key thing is its target, schizophrenia. And specifically, what gets highlighted is its potential best-in-class profile.
Best-in-class. Why? What's the specific angle?
Because it aims to treat the negative symptoms of schizophrenia. That's the potential game changer.
Wait, hang on. Targeting negative symptoms?
Yeah.
Why is that such a big deal? Don't the current drugs already handle that?
Well, that's exactly where the huge unmet need comes in. See, current treatments, the standard ones, they're actually quite good at managing the positive symptoms.
Like hallucinations, delusions, that sort of thing.
Exactly. But the negative symptoms, things like, social withdrawal, lack of motivation, that emotional flatness, they often just don't respond well to existing therapies.
Ah, okay. I see.
Yeah. So if brilaroxazine can show real effectiveness there, it taps into this crucial multi-billion-dollar market segment that's largely underserved right now. That's the core promise.
Okay, so if brilaroxazine is the star, funding its development must be expensive. Hollywood budget stuff, right? Requires a huge R&D commitment. How does their balance sheet look?
Predictably, it looks exactly like you'd expect for a late-stage development biotech. Reviva hasn't generated any product revenue yet. Zero.
None at all.
Nope. And consequently, their trailing 12 months, or TTM, net loss is around $27.11 million. EPS, earnings per share, is sitting at negative 64 cents.
And just quickly for listeners, TTM is the last 4 quarters combined. EPS is profit or loss per share. So yeah, they're burning cash. That's normal for this stage, but they need cash to keep going.
Precisely. All the value here is purely tied to that pipeline success, not current operations. Now, the market cap as of late October 2025 it's pretty small, just $56.07 million.
Tiny, really, in the grand scheme of pharma.
Yeah, it is. But one thing that looks good is their financial structure. They have very low financial leverage. And importantly, no reported long-term debt.
Okay, that's a positive. Reduces one type of risk at least.
Yeah, it gives them a better sort of lower solvency risk profile compared to many peers who might pile on debt for R&D.
But low debt doesn't mean they don't need actual cash working capital. You mentioned they did a capital raise recently. Was it enough?
Yes, they short things up in September 2025 with a $9 million public offering. And this is a really key detail. That offering was priced at 0.335s per share. 335.
Okay, 33.5 cents. That's a crucial benchmark, especially since the stock is trading, around double that now?
Exactly. So that raise gives them enough liquidity, they say, to meet their near-term operating needs and hit those upcoming regulatory milestones. Now, you asked the right question. Is $9 million really enough for a company facing an NDA filing?
Yeah, seems tight.
It's always that biotech tightrope walk. But for now, the cash ensures they can, theoretically, meet the key deadlines in the next few quarters. And naturally, no dividends, no buybacks. Every cent goes to R&D.
Right. Getting brilaroxazine over the line.
That's the sole focus.
Okay, here's where it gets really interesting for potential investors, I think. We're moving from the, let's say, stable fundamentals, or lack thereof, to the potentially explosive catalysts coming up.
Yeah.
For a stock under $1, you'd normally expect analysts to be pretty cautious, maybe even negative. But the sentiment here is, wow, it's kind of staggering.
It really is. We're seeing a strong buy consensus from, between 6 and 9 Wall Street firms covering it?
6 to 9 firms, all saying strong buy, on a company this size with one pre-revenue drug. That's unusual.
Highly unusual. That level of conviction stands out.
And the price targets they're putting out, they seem almost unbelievable. The range is huge, right?
It is. The targets range from, say, a more cautious $2 all the way up to $11 per share.
$11.
Yeah.
From around 67 cents now.
Yep. And the consensus 12-month target lands somewhere between $3.33 and $4.50.
Okay, let's just pause on that. If you run the numbers on that consensus, you're talking about potential upside of what, 450% to over 560%?
That's the math, yeah. Astonishing implied upside from the current price.
Wow. That's a five-bagger implied by the consensus. I have to push back a bit here, though. What are these analysts seeing that justifies that kind of leap? Is it purely based on potential sales if approved, or are they baking in something more, like an acquisition?
Well, that's the crux of the speculative angle, isn't it? The research suggests they're primarily modeling the commercial potential based on that unmet need and negative symptoms we talked about.
The multi-billion-dollar market.
Exactly. Estimating huge peak sales potential, especially with long patent protection. However, you're right, many of those higher targets, especially the $11 one, they are absolutely pricing in the possibility of a strategic deal.
Like an acquisition by Big Pharma.
Precisely. A major player wanting to grab a potential best-in-class CNS asset. So yes, the risk is sky high, but the potential payoff is, well, asymmetric, hugely asymmetric.
Okay, that makes more sense. The market isn't necessarily waiting for the deal itself, but the analysts anticipate the trigger for that kind of interest. So what are these immediate binary catalysts that could be that trigger? The ones driving things in the next, say, 3 months?
Okay, yeah, we have 3 very specific high-impact events coming up really fast. First, just a couple of weeks away now, November 13th, 2025.
Okay.
That's the Phase 3 brilaroxazine Recover data presentation at the CNS Summit. And importantly, they're specifically focusing on the negative symptom data in schizophrenia.
The key differentiator.
Exactly. If that data looks good, the whole story could re-rate almost instantly.
Then, after that?
Then we get a financial update. December 3rd, 2025 is their Q3 earnings release. That'll be crucial for updating everyone on the cash runway after that offering. How much time do they actually have left?
Right, confirming the burn rate and the timeline. And the third one?
The big one. The regulatory milestone. The expected NDA filing. That's the new drug application submitted to the FDA, basically asking for approval to sell the drug.
And when's that expected?
Anticipated late Q4 2025 or maybe early Q1 2026. So very soon.
And with that filing, there's talk about potential designations like fast track or breakthrough therapy. Why does that matter so much to an investor?
Yeah, good question. It matters because of time and risk, fundamentally. Getting a fast track or breakthrough designation signals that the FDA acknowledges the drug addresses a serious unmet need.
Okay.
And practically it can open the door to things like rolling review, more frequent FDA interaction, and potentially accelerated approval.
So it speeds everything up.
It speeds things up, and from an investment view, it cuts down the waiting time and theoretically de-risks the process somewhat, bringing that potential big upside closer.
And we're seeing signs the market is positioning for this, right?
Yep.
Like institutional buying.
Definitely. Reports indicate growing institutional ownership, increasing inflows. It looks like small cap and specialized biotech funds are, getting their positions set ahead of these deadlines, trying to front run the news.
Makes sense.
And let's be real, you also have the background noise, the market chatter, the rumors about potential strategic interest partnerships, licensing deals, maybe even a full M&A. That's absolutely adding fuel to the fire.
Especially if that November data is positive.
Oh, absolutely. If the data on the 13th is a clear win, that chatter could quickly become much more concrete, potentially leading to that rapid re-rating, maybe even well above current analyst targets, as some sources suggest. So if we try and connect all this, the intense binary risk, the potential reward to the stock chart, the technicals seem to line up with the bullish story too, but with a huge caveat.
What's the caveat?
That the technicals are being driven by these company-specific events, not the broader market. But yeah, the price, around 0.6753. It recently broke through some key resistance near $0.60.
Okay, 60 cents was a ceiling, now it's potentially a floor. That's a classic technical signal, suggesting momentum might be shifting upwards. What's the next hurdle people are watching?
The next big psychological and technical level seems to be that $1 to 1.25 zone. Getting above $1 is often a big deal for stocks like this.
Yeah, it brings in more momentum traders, gets more visibility.
And the indicators support it too for now. The stock's trading above both its 50-day and 200-day moving averages. textbook bullish setup.
Okay.
But the really crucial technical detail here, the one I think everyone needs to focus on, is the beta.
Yes, beta. Remind us what that means again.
So beta measures how much a stock's price tends to move in relation to the overall market, usually the S&P 500. A beta of 1 means it moves with the market.
And Reviva's beta is?
It's a striking negative 0.09, minus 0.09.
Wow, negative. That's really low. Almost zero correlation, even slightly inverse.
Exactly. It's extremely rare and super significant here. It basically tells you the stock's price movement is almost entirely driven by its own story, the clinical data, the FDA news, not by what the broader market or the economy is doing.
Okay, that's fantastic context. So it confirms this is really a pure play bet on their science, on brilaroxazine. You're not really exposed to general market ups and downs.
Pretty much. If the science works, investors could win, theoretically, regardless of whether the Fed hikes rates or what happens with inflation that day. It sort of isolates the bet.
De-risks the macro picture, you could say.
It does, but you have to accept the flip side. Intense volatility tied to that specific bet. Sources mention really high volatility, like average intraday swings of 20% or more.
20% swings. Okay, that definitely requires serious risk tolerance. You need a strong stomach for that.
No question. You have to be prepared for massive moves on any piece of news or even just rumors.
But that volatility is coming with high volume, right? You mentioned that earlier.
Yeah, elevated volume. We're something like 11 to 12 million shares trading hands per day recently. That's a strong sign of growing interest and participation.
So money is clearly flowing in, positioning for these catalysts, both institutional and maybe more speculative retail traders.
It seems that way. That high volume suggests conviction is building, both ways perhaps, but certainly participation is increasing into this November to January catalyst window.
Okay, let's pull back for a second then. We've laid out the potential upside, the catalysts, the technicals. But before we wrap up with a rating, we absolutely need to hammer home the risks. What are the key things investors absolutely must consider here? Because this isn't a set it and forget it stock.
Not even close. The risks are significant and, as we said, profoundly binary, often all or nothing in these situations. Number one, obviously, is the heavy reliance on the single lead asset, brilaroxazine.
Right. There's no plan B generating revenue.
None. So if that crucial November 13th phase 3 data disappoints, or if the FDA interactions later on don't go well, the share price could retrace very sharply.
And we have that reference point from the offering 0.3353 per share. A bad readout could easily send the stock back towards that level, or maybe even lower.
It absolutely could. Furthermore, even if they get approval, commercial viability is still unproven. They're pre-revenue.
They actually have to sell the drug successfully.
Exactly. Nail the launch, compete effectively, get reimbursement. The whole commercialization journey carries its own set of risks, even post-FDA approval.
So summarizing the risk, the entire investment thesis really hinges on near-flawless execution over the next, 3 to 6 months. It's an incredibly tight window with massive potential consequences, good or bad.
That's precisely why we land on an overall bullish rating, but a qualified one, let's say 8.5 out of 10. The thesis is compelling because you have this rare convergence.
The strong analyst targets pointing to huge upside.
The favorable technical setup breaking that resistance.
And this incredibly dense concentration of high-impact, binary catalysts packed into the next 90 days or so.
Right. It creates what feels like an undeniable asymmetric upside opportunity. The potential reward seems to outweigh the risk, mathematically, if the analysts are right, but the risk of significant loss is very real.
So it seems attractive for potentially two different types of investors, maybe short-term traders playing that November to January catalyst window.
Definitely. And also, perhaps, longer-term investors who believe in the science and see the structural potential. I mean, the patent coverage for brilaroxazine, if successful, apparently extends well into the 2040s.
Wow. Decades of potential exclusivity.
If they can get it to market and succeed, yes.
Okay, so that brings us to the final thought then.
Yeah, I think this really raises a critical question for anyone looking at this. Given the intense reliance on brilaroxazine, you have to ask yourself, are you truly prepared for that possibility of, say, 500% upside, knowing full well that the potential for a very steep, painful drop exists if that FDA timeline slips, or, more importantly, if that phase 3 data disappoints? That really is the fundamental trade-off you're making with a high-risk, high-reward asymmetric play like this one.